What's going on, guys and gals? Welcome back to the channel. In this video, we are going to go over buy stops and sell stops, buy side liquidity, sell side liquidity, because if you're like me, this confused me forever when I first got into trading. It was confusing to me for over a year. Now, I probably should have got it a little sooner, but also kind of strayed away from that and just started learning patterns and got into the whole pattern trading thing. And, since that was kind of, it was limited. So I wanted to up my game. So I started looking once I was into smart money concepts before smart money concepts got really big. Not trying to I'm not gloating, I'm just saying that's just a fact. I got into it before anybody else did, or not anybody else, but before a lot of people, before it just like blew up after Lux Algo put out the smart money concepts, it just kind of blew up a little after that because I started looking into the indicator before even Frankie Candles on the Frankie Candles YouTube channel, before he even knew about it, and before he was even sponsored by Lux Algo or had a partnership with them, whatever it is. Anyway, so this is part of smart money concepts. So if you're into that and you like what you see here, hit that like button, subscribe to the channel if you're new, and hit that notification bell to be notified for when I create new content and when I go live. And hey, how about leave some comments in the description box telling me what you thought of the video, or or make a suggestion on something else that you would like to see. Maybe there's something that you're confused about that I might be able to help explain. So, let's get into it. Buy stops and sell stops. Now, first of all, why is it confusing to people? Well, for the most part, all right, so the first thing we got to do is we got to find our support and resistances, or our likely areas. So right now, this looks like a strong area of support, right? Why? Because we've kind of bounced off of it a couple of times. We got a little, if I count that little wick right there, I mean, every exchange is going to be different. These might line up on another exchange. All that matters is that this was a level that was respected, and it was stopped right here on the second tap. So that's the one that I go with. All right, doesn't matter. All that you need to know is below that is what is called sell side liquidity. Sell side liquidity. It says that sell side's not one word, but I don't care. All right, so sell side liquidity. Okay, so what does that mean? That means there's a lot of sell orders here. Yes, there is, because price was coming down. People went short. They went short late, and then they got stuck in their shorts. So this is people stuck in their shorts. When price comes back down to it, people get out of their shorts and possibly even go long, or they just leave the market entirely because price went against them. They got scared. Now, they probably did put some stop losses in here, and it didn't take them out. So they might have felt that that was good, and then once price started drifting away again, then it breaks here, then they just get out, and then the market shoots up because they're selling, and then you got the buys. That's how it works. Okay, so sell side liquidity. Now, that's sell side liquidity. I'm not going to do buy side liquidity because I want to make this a quick video. Buy side is just the opposite of sell side. How about that? All right, so we've got sell side liquidity. Also, we have what is called sell stops. which is part of the liquidity, but we've got sell stops. Now, why is it called sell stops? Because you're thinking, if you're thinking like I used to think, why are there short stop losses below at support? But that's not what it is. So what sell stops means is people that are long from here have stop losses, right? If price comes back into that level where they have their stop losses, they are forced to sell. So it is a sell stop. So if it's buy side and it's buy stops, then a short seller would be forced to buy back at their stop loss, which rests higher than their entry, right? What does that do? So what sellers do, short sellers, what they do is they tell the broker, right? They're telling the broker, hey, I want to sell at this price. I want to sell this many at this price, okay? Because I'm expecting price to drop. That way, when I buy back, I'm buying the Bitcoin or whatever at a discount. So they're selling high, buying low. Basically, is what they're doing. That's all that it is. So when you have buy stops, that means what you're selling, you have to buy back at some point. You want to buy it back at a cheaper price if you're selling it. If you're buying it, you want to buy at, or you want to sell it at a higher price. That's how it works. So when you sell it, you're expecting price to drop so that you can buy back at a discount. And what the buy stop does, since it rests above, it forces you to buy back at a higher price, which means you lose profit because you sold down here, but now the price has moved away from you, and now you have to buy back. Now you have to buy back at a higher price than what you initially sold at. So that's obviously not good. So that's your buy side liquidity and buy stops. That's your sell side liquidity and sell stops. And how can you use this to your advantage? Well, you know that the liquidity is down here. You know that, or this is what you could expect anyway, not financial advice. You could expect, okay, we got a double tap down here. We got a quick movement to the upside here. To me, that says, okay, we're coming up here to take out the buy stops that are resting right here at this candle. Why are they resting there? Because where else would retail put their stop losses if not right there? Why can't you? What? Right there. Can you see that? I need to make that black. Right there. So if anybody went short right here, or anybody went short right here, or anybody went short right here, you've got buy stops resting up here and up here and sell side liquidity. So price runs up to it, and guess what? You have this liquidity down here and sell stops. So once this gets taken out, you can expect for price to shift down and take out the other side. If we go down to a lower time frame, you can see on the 5-minute this slow drop at the top here, and then that big candle. Once you get that big candle that takes out that low right there, right here, you get that big candle that takes out that low right there, and then you get another one before it takes out this side right here. You're almost, that's a good trade. You can just mark it in, mark it out down here. I mean, I know that's like taboo, marketing in and marketing out, but if I'm watching the price, that's what I'm doing. Now, that's just because I've got my levels set. I know where they are. I don't want to risk a limit order not getting hit. So if it runs down, I mean, if it falls below it, see, if I'm watching it, I can watch the price action develop, and I can maybe take advantage of seeing this price come up here and fail and come back down even lower and then exit. I mean, but that's the gist of it. I hope you enjoyed the video. Yeah, if you liked it, please hit that like button and subscribe to the channel if you're new, and hit that notification bell. You heard it all previously, so, I love you all. Thank you for watching. Thanks for stopping by Lunar Beaches Crypto, and I'll see you in the next video. Peace.